Monday, June 14th, 2021, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at how the last time real interest rates were this low, gold and silver were in a raging bull market, and I don't think anything is going to change. I know the price of gold and silver have been hit hard in the last few trading days. The unallocated price, not the real price of physical gold, has been tamped down, so to speak. Before I start though, I like to say that if you enjoy my videos but haven't subscribed yet, think about subscribing, think about hitting the little notification bell to be notified of all my new videos. I make a video every day. Also like to say this G7 meeting we've had, I think it's just like theater. These people are very deluded. They're just puppets. We need to keep stacking not only silver but gold. When you stack gold and silver outside the system, you stop financing these criminal leaders, in my opinion, and the people behind them as well. So that the FT is reporting Biden rallies Western allies in global contest against autocrats. So they need to look at themselves in the mirror before saying that. And if you go into the article in the FT, they've got the official pictures for the public, for public consumption. They're distanced, wearing masks. But it's funny because I get notified of these articles by email from the FT. And I guess the FT has slipped a little bit, because on the email, this is the photo they put of Biden and Macron. They're like hugging each other, no masks. So where's the social distancing? Where's the mask? I thought we were going through the worst pandemic in the history of the world, and here they are. We also saw the Queen this weekend with these puppets, not wearing a mask, close to them, everyone talking, dozens of people together, and we're told that we can't do that. So just wanted to vent or rant a little bit about that. So yeah, a lot of times we're told that gold is a pet rock, it doesn't pay any interest. But the other side of the coin is that Federal Reserve notes, or what they call cash, the stuff you got in the bank or that you put in your wallet, unless you lend that as well, you don't get any return. So yeah, of course, when gold didn't have to compete with legal tender laws for trashy fiat currencies, gold was money, and it still is, of course, silver as well, and you could lend those out and get an interest. But even now, for example, the fiat currency that many people say are great, you know, we got government bonds, we got the fixed income market where we can get a yield or a return, your coupon paid. But right now, though, if you take yields and subtract them from the rate of CPI, which is 5%, they're the most negative since 1976, as you can see here. And I've taken this from mishtalk.com. He's written a pretty good article. He says real interest rates suggest it's a good time to buy and hold gold. And he's taking the 3-month yield, which is just above zero. I think it's at 4 basis points. So you take that minus the CPI, which is 5%, and you get minus 4.97. So as you can see, it's the lowest it's been since, 1980. But also, yeah, we had negative real rates this low back in the 70s when gold was in a raging bull market. So how come gold hasn't gone through the roof after that CPI number with silver? Well, because these are short-term moves. Markets are never really Sometimes they act like they should, but in the short term, anything can happen. I would say in the long term, we need to hold on to our guns, so to speak. We need to be patient. And as I said earlier in the video, we don't want to finance these people. We want to keep stacking because as Howard Buffett, who was actually Warren Buffett's father, he was a gold bug. He wrote in 1948 or made a speech that, gold allows you to vote with your wallet, because if you keep a lot of your savings or fiat currency balances in the bank, that bank is associated with the government. That gives them the firepower to hypothecate your money, fractional reserve it, and to keep buying these government bonds, to keep financing the government, to keep interest rates low. So here's another chart: real interest rate versus the price of gold. And as you can see, in the 70s there was a raging bull market in gold, but even then, I think from 1975 to 77, gold corrected, and I think it was at 200 and it almost corrected to 100. I'm sure there was the same talk as there is now. Oh, the bull market in gold is finished. These gold bugs, they're always talking about things, but I think it's the same. So, and what is interesting is that we are almost at all-time highs here, and this is still happening. It's the fundamentals haven't been better. And the other thing I would say is that the gold-silver ratio is showing as well that things could pick up soon, because in the precious metals bull market, silver outperforms gold. And it looks like we're starting to move lower again in the gold-silver ratio. We're just below 67 here. I think 64 is a key level. That was pretty much the low earlier this year, and if we break through there, it could be an indication that the metals are going up again. So let's look at where the markets are this morning. It's 7:30 a.m. London. We've got spot gold or unallocated gold, paper gold, whatever you want to call it, down $17. And the rest of the markets, all the other asset classes, are very quiet. So more shenanigans, of course. We are at 1860, just above 1860. The low's been 1859.31, the high 1879. Silver is down 12 cents or 0.5%. So silver is down but outperforming gold at 27.77. The high's been 28.02, the low 27.71. The Dow future is up 12. NASDAQ 100 future up 16. S&P up a couple of points. The currencies are virtually unchanged, so I really won't go through the currencies here because there's not much to talk about. Aussie Dollar, let's see where we are, 77.06. So the Aussie Dollar has come off a bit because we were above 77.50. Not sure what's happened there. So Aussie Dollar on the back foot slightly. What about the other commodities? Well, we've got WTI crude comfortably above 70, almost at 71, up 0.25%. High-grade copper is down 0.5% at 4.52. And the 10-year yield, that continues to stay pretty low. It is unchanged, but it's at 146. So 146 minus 5, it's like 354 negative, the real rate on the 10-year yield. Yes, earlier we're looking at the real rate as per the 3-month yield. The 3-month yield is just above 3 basis points, not 3%, 3 basis points. That's what you're getting to save, to lend your money to the most profligate institution in the world, Uncle Sam, the U.S. Treasury. So this week, of course, we've got the FOMC meeting starting on Wednesday, ending on Thursday, where they come out with their announcement, and there's a press conference as well. It looks like the market is looking for more dovishness, more accommodation from the Fed. Usually, as we approach these meetings, gold and silver have a tough time, but I would expect maybe, the resumption or the conclusion of the meeting to be kind of near a bottom for gold and silver. That sometimes happens. That's what happened back in December 2015. Gold bottomed at 1,045 just after an FOMC meeting. So we'll have to see if it happens again. So with that, I'm going to leave you here. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on all these other platforms below here. So I wish you all a great day. Take care. Bye.